Hey everyone, Couch Investor back to another video for today. So let's talk about the state of Disney. The stock is down 45% year to date. It's down over 50% since its all-time highs. We have a new CEO, well, a new old CEO, because Bob Iger replaced Bob Chapek. Now, to be honest, when I first heard the news, I thought, hey, great news. Disney will turn around pretty quickly because it was a disaster during the Chapek era. But let's be honest, everything that, well, is troubling Disney today started with Iger. Then Iger stepped down, he chose Chapek, pandemic started, pretty difficult time to manage the business. Then everything became a bit political at Disney. Suddenly, well, they called him on a Sunday night, fired him, Iger came back in. Now, will Iger be able to turn this huge ship around? I don't know, but if someone can, it's probably him, and he's probably learning from Chapek's mistakes and his personal mistakes when he was the CEO before. Now in this video, we're going to go over two analyst notes. We're going to talk about the success of Avatar and the, well, failures of the other Disney movies this year, and what might happen in 2023, 24, 25, and so on and so forth. But first of all, let's look at the state of Disney right now. Of course, we can see it looks completely weird, right? Was trending up pre-pandemic, then during the pandemic, revenues got crushed, free cash flow got crushed, return on equity got crushed, and then during the reopening, everything, well, not everything, but the revenue kept on going up. Free cash flow is still going down. Return on equity returned to a more positive area, but still far, far from where we were pre-pandemic. Gross profit margins are making their way back up. Now, from a PE to growth standpoint in the next 12 months, we're still a bit over that 2 times. Now, of course, the stock is down quite a lot, but if you look at the forward PE here up top, it's still over 20 times. Now, that's also because, well, Disney is not really becoming more profitable by the day. With the launch of Disney Plus, they say 2024 is the year where 1 quarter will be profitable. Let's wait and see what happens, because if 2023 is a real recession year, not only will parks take a hit, but probably Disney Plus as well, the production there, so maybe less content, so maybe less people will be incentivized to actually pay for the subscription. Now, we've talked about the subscription way before. I've made the mistake of saying they have more subscribers than Netflix, but I corrected myself, it's more subscriptions. It's a whole thing. But the average revenue per user, let's call it, is much, much lower than Netflix. I mean, we've seen Hotstar, they're paying what, $50 to $1 or something like that? You cannot monetize this way. Of course, Disney Plus has also launched an ad-supported tier that might help them. Of course, the entry fee here is lower, but they're making it up with advertising. But to be honest, I do think that Bob Iger will have a lot of work to do if he really wants to put Disney back on top of its game, because the Disney brand probably got hit. The most recent movies in recent years, TV shows have not been up par with the Disney quality. It has been very, very political, let's say. Some might say it's been political always, but I beg to differ. So he will have his work cut out for him. And so before we go and look at 2 research notes, if you like this type of videos, leave it a thumbs up and subscribe if you have not. And if you enjoy this type of content, maybe do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor and make sure to check out all the other links in the pinned comment as well, some of which might actually save you some money. So, number 1, we have here one from Morgan Stanley. He lowered his price target from 125 to 115. He lowered his estimates to reflect updated fiscal year 23 guidance, which he said he views as achievable even with current macro environment and linear pressures. The return of Bob Iger as CEO offers the opportunity to reorganize Disney's media businesses to prioritize driving overall Disney consolidating earning growth. Even though Iger is facing known but real secular and cyclical headwinds, his analysis suggests cost opportunities at the media business and momentum at parks should support about the 20% adjusted EPS compound annual growth forecast through fiscal year 25. Now, just to be clear, I might be seemingly a bit negative on the business because I've been a long time fan of Disney. So seeing the brand take a hit, seeing the brand crumble to a fraction of what it was during its glory years hurts personally. But is Disney still a global, huge brand? 100%. Are parks still full? 100%. Are the tickets extremely expensive? 200%. So, will Disney still be a success in years and years to come? Probably. But how big of a success really depends on the coming years. Now, with regards to restructuring, we have another note here from Wells Fargo's analyst. So he thinks that Bob Iger is returning to Disney to make big changes, as we've heard in the other one. Spinning ESPN ABC is the best path forward, adding that he sees it is a reasonable, probable late 23 event. He believes splitting would leave remaining Disney as an attractive pure-play IP company. The analyst has an overweight rating on the shares with a price target of $125. To be honest, it would not surprise me if this happens. Now, with regards to growth, especially earnings growth, these are the projections, let's say, for the next couple of years. So September 23, we have an EPS estimate of $4.18, year-over-year growth of 18.3%. But the year after that, they expect especially huge growth considering everything that's happening, close to 30% year-over-year growth. Then we go back down a little bit to 16%, and in 2026 growing another 22%. Now, of course, 26, 27, the number of analysts that project this are only 2 and 1. But let's look 3 years out. They do see some significant earning growth there. And so if you're looking at 2025, you're paying a forward PE of just over 13 times. So although right now profitability seems a bit of an issue for Disney, most analysts think that it will grow quite nicely in the next couple of years. So maybe, yes, maybe it might actually be a cheapish opportunity today. Now, to be successful in the future, they do need to come out with, well, successful movies, TV shows, maybe some new attractions in their theme parks. Talking about the theme parks, I heard that the also classic train there in Orlando is back and running, which is a big positive for the big fans. Now, another big thing is that Avatar: The Way of the Water crosses $1 billion at the global box office. And me personally, I went to watch it last week. I loved it. It's 3 hours, but to be honest, it went by extremely fast. And the picture, the quality, the special effects, the 3D was just amazing. Now, I don't know if it was amazing equals 13 years of waiting, but it's worth going and paying the fee of watching it in the cinema. So, the movie surpassed $1 billion globally after just 14 days, becoming the fastest release to cross that box office threshold since Spider-Man: No Way Home in December 2021, and the fastest in 2022. Now, just a little extra info here. When it came out, the World Cup was still ongoing, so maybe that might have taken a bit of a hit. There's also the storm, so they're taking a hit on that as well. So maybe in the coming weeks, it might be even surpassing 2 billion. Who knows? And a bit more information with some comparisons here. So Avatar: The Way of the Water has passed Jurassic World Dominion to become the number 2 release of 2022. By the way, that movie was a complete disaster, but somehow it reached number 2. It's probably just because of the name. And the number 3 release of the pandemic era. Internationally, it's closing in on Top Gun: Maverick, my favorite movie of the year, $770 million internationally, which, if crossed, would make Avatar: The Way of the Water the number 1 international release of 2022 and the number 2 international release of the pandemic era. Also, internationally, we have to include China here, and with the problems that China has right now, probably this is impacting the numbers as well. And last thing about Avatar, and then we're going to look at the flops of the year. So it hit that number 5 days faster than its predecessor in 2009. That movie is the number 1 at $2.92 billion in global grosses. Now, to be able to be profitable, it needs to be one of the top 3 grossing movies of all times. Currently, the 3rd highest global grosser in history is, of course, James Cameron's Titanic with $2.2 billion. So it basically needs to double what it is today to just turn a profit. So as an investor, when you read this and you're like, it just surpassed 1 billion in box office, you need to double to just turn a profit, you're like, it might be tricky, right? And you're correct, it might be tricky, but to be honest, I think it will happen. Now, during 2022, Disney released a lot of flops and money-losing ones. Such as, number one, Amsterdam. Amazing cast, but a cast sometimes, does not really make the whole movie. In this case, ultimately Amsterdam earned a little over $30 million at the global box office, a far cry from its $80 million budget. Death on the Nile, the sequel to The Murder on the Orient Express. So this one topped off at $130 million, hardly more than the film's $90 million budget and significantly less than half of its predecessor's grosses. Okay, another L. Strange World. You probably heard all the controversy behind this movie, but hey, it's been a complete disaster. It's been projected via Variety to lose Disney upward of $100 million. Continuing here, Turning Red. CNBC reported that Turning Red was the biggest financial disappointment of all time after it lost an estimate $168 million upon its release. Then Pinocchio, I'm not going to talk a lot about this because this was a complete disgrace and disrespectful to the original Pinocchio. And if you go on Netflix and you watch Del Toro's Pinocchio, that is a masterclass. This is complete garbage. And last one I want to talk about is Thor Love and Thunder. Of course, since it's Thor, since it's still the, let's say, OG Marvel movie franchise with the Avengers, then obviously automatically you bring in millions and millions. But to be honest, the movie was absolute average. You might be a huge fan of Taika Waititi, but there's a big reason why he won't be producing the next one. Because this movie overall was not great. It earned over $760 million at the global box office. Okay, fine. But, as you can see here, the bigger concern for the film came at the box office in its second week in theaters. Love and Thunder saw its sales drop a stunning 68%. Now again, from an investor standpoint, this is not something you would like to see. From a movie fan base standpoint, this is also something you don't want to see, but you know why this is happening. We've seen this with other platforms as well, on Netflix, on Amazon Prime, for example. The prime example, Rings of Power. Nothing made sense there. The characters, the storyline, nothing made sense. What did make sense is the political message and the cultural message that they wanted to portray. Sorry to say this, but yes, it's true that Hollywood is dying. There are some great videos there on YouTube explaining exactly why it is dying, and that scenario is just being played out after every big Hollywood movie released this year. So, Disney, currently at its current valuation and the projected growth, does it make sense for investors to be excited? Yes, it does make sense for investors to be excited because Disney as a brand is still one of the most popular ones around the world, still one of the most loved ones as well. But there is a lot of work to do to be able to pick Disney up where it is today and put it back up on top where it was just a couple of years ago. Of course, there's a lot of negativity around not just Disney, but everything else. And usually when there is the most noise, that's when we're near a bottom. We've seen that with Netflix. We've seen that with Meta as well. When both of them crashed 70%, near the bottom, it was the loudest. Since then, one is up 67%, the other one is up 30%. So let's see what might happen with Disney. Obviously, do share your thoughts in the comments below with regards to the state of Disney today. Do you think they can turn it around? Do you think it's going to be a great investment going forward? Let me know down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And I'll see you all in the next one. Bye bye.